go ahead and start? Start talking. Say hello.
Good morning, everyone. Welcome to our webinar. I'm Mythili Richards. I'm presenting the tax planning with you today. I am an enrolled agent. I earned the privilege of representing the taxpayers before Internal Revenue Services. I'm a member of a National Enrolled Agent Association, and I've been working with Business Resource Partners for the last 1 year. We have specialized in preparing tax returns for individuals, small businesses, corporations, partnership, and non-profit organization. We have also prepared tax returns for residents and non-residents of USA. We have prepared tax returns for the non-US citizens who had investment in Florida and for Florida residents who had income from the other states. So the 2017 taxes are going to be a little bit complex, just like any other year. We have a new leadership in Congress, and we have a new president, and they are trying to simplify the tax laws as we speak. They have proposed 3 tax brackets, and we still don't know which income or what income is going to fall in those 3 tax brackets, but it is very different from the other years where we had like 7 to 9 tax brackets. So it's going to be a challenge, it is going to be complex, and it is very essential that we do the tax plannings for you. We are in Florida, is one of those states that doesn't charge us any state income taxes, but we do prepare non-resident tax returns, and we are specializing on that. And all through this presentation, I'll be presenting some tax planning materials, but it is merely for the information purposes only. It is not a legal, accounting, or a tax advice, and every case is different, is a unique case, and every situation is different. So if you really prefer a professional care in your tax matters, please give us a call and make an appointment, and we'll take care of your tax planning. And we're going to be talking very basically on the tax planning. It is merely maximizing all your tax deduction that is provided and guided by the tax laws, or defer your current income to the future years, which is very critical because at this point you have to compare 2 years of your income to make sure that you're not overpaying in 1 year or underpaying in another year. So it is better to analyze both the years. And we also want to take a full advantage of all the rebates, credits, exemption, deductions, all that is available for you. So it is very essential that you do the tax planning to minimize your tax liability. We also have a short-term tax planning, and it's a long-term tax planning. The short-term is it is year to year, and it has a very limited goal. But the long-term tax planning, the tax benefit is spread over many years. Who should consider tax planning? Actually, it is everybody and anybody. The tax laws are very, very complex, and it changes from 1 year. The regulations and the rules changes from 1 year to the other year. And I, as an enrolled agent, have to attend classes.
We have a question. What is the difference between a deduction and a credit?
A deduction just brings down to your taxable income. The credit is a tax credit is a credit of your taxes. So, for example, if your tax liability is $500 and you have a credit of $200, it's going to be your tax liability is going to be only $300. But the tax deduction is only a deduction from your gross income, so to bring down your adjusted gross income. I hope I helped you in that. So when to really do the tax plan? Actually, today is the day, or this is the best time to do it. before you have to keep all your records and your documents and everything, keep it at one place and organize them. Earlier is the best one to do it. You have nobody wants to think about the taxes right now because we just finished our tax returns and we just had a good summer and then we are approaching the holidays.
We have another question from
Okay.
Jonah Hackley Davis. They would like to know, how long do we have to keep our tax records?
The IRS recommends, Internal Revenue Service recommends at least 7 years. And if it is a business, it could be longer, but it is good to keep all those records for 7 years. So thank you for asking the question, and I hope I helped you. So we're talking about when to do the tax planning, and as I mentioned to you before, it is the year end. When you have the time to organize all your files, keep a record of all your credit card statements, your cash receipts, your bank statements, to make sure that you have all the expenses taken care of before the year end. So the tax planning is different for individual and for businesses. And how are we going to do it? For an individual, it is every case is different, as I mentioned to you before. If you have a retirement fund, individual retirement fund, you can maximize your 401 contribution before the year end, or I think it is allowed until April 15th of the following year. If you have a health savings account or flexible spending account, maybe you can contribute more into that account, which will bring down your adjustable gross income. If you have itemized deduction or in the border of itemized deduction, maybe you can prepay your property taxes, maybe you can pay your medical bill, maybe you can pay your medical premium and increase your charitable contributions. So in this way, this will also bring down your taxable income. You have a stocks portfolio, and maybe this is the time to review your performance and see if there are any stock at a loss. It's time to sell those stocks before the year end and recognize the loss of up to $3,000 in the current year. And as you're all aware, there are several federal tax credits available for individual, like Earned Income Credit, Child Care Credit, Child Dependent Care Credit, American Opportunities Credit, and Energy Credit. So not everybody is qualified for that, but it is good to keep a documentation of everything and let us, the tax advisor, help you to see whether you're qualified for any of those credits. The same way in the businesses, you also have capital expenditures that you can take care of before the year end, and maybe you can postpone your income to the next year. And also there are several credits available for the businesses.
We have another question. Is there a cap on how much an individual can contribute to a 401k or a health savings account per year?
Yes, it does, and they all differ from year to year. And if it is also, if it's a joint filed tax return is different. So please call us and we will let you know what is best, what is the limit on those things. So we are also going to be talking a little bit about the benefits on the tax planning. The tax planning is a great tool to plan your future because you would know what your tax liability is going to be. You can take care of your personal budget at that point. It is also the every year things change in your personal life, and it is time for you to sit down and organize it, and the tax planning will help you to take care of that. And if you're in the sunset of your life, maybe this is the time to do your estate planning, maybe create some trust for the benefit of your dependents. And so that is it is very essential to have a tax planning for the individual, especially when you have changes in your personal life in this current year. It also helps businesses because you would know what your tax liability is going to be, and you can control your cash inflow and outflow. And also the sales promotion planning will tell you what the growth in your revenue is going to be. And you, with the tax planning, you would like to keep most of the revenue in the business and help it to grow. So the tax planning is not just a mere tax preparation. It is also helps you in your personal life, personal finances and business finances. Last but not least, I want to talk a little bit about the disaster relief program that is available. Unfortunately, we had a lot of natural disaster this year in USA, which is Hurricane Irma, Maria, and Hurricane Harvey, and wildfires in California. So and for those specific areas, the Internal Revenue Services have offered some tax relief programs. So call us and then make an appointment, and we can discuss if you qualify for those to deduct those personal and business losses. At this point, I am open to questions. If you have anybody have any questions, please text us.
Okay, we have another question from Jonah Hackley Davis, the Manifesting Diva. She would like to know, when should I start planning?
Today, for the 2017, you have to do a tax planning today because you want to make use of the year-end deduction that you can take before the year-end closes. This is the best time to bring all your the profit and loss statement or your year-to-date earnings, and we can consult and see whether we can maximize all your deductions and or defer your income to the following year and reduce your tax burden. And we don't want any surprises next year when we prepare the tax return, because by that time it will be too late. To conclude, tax planning is a smart and intelligent way of applying the tax laws.
We have someone who would like to request an appointment with us.
So it is a very smart and intelligent way to apply the tax laws with an expert knowledge. I thank you for coming to the webinar and listening to us. As you can see on the screen, Business Resort Partners covers the most of the accounting and financial matters like QuickBooks and tax preparation, human resources, IT, and administration of the virtual offices. So you have our number here, 321-236-2771, or email us at info@business-resource-partner.com, and we'll gladly help you with your tax matters or any other accounting needs. And thank you.
This is also the same way you would need to contact us to set up an appointment for be it your tax planning needs or anything else that Business Resource Partner does cover in our office.
Thank you for listening to us, and we're looking forward to hearing from you. Thank you. Thank you for your time.